If you are new, I thank you. I applaud you because you made the right choice on clicking this video. Today we're going to be focusing on reevaluating the market maker strategy. For these past couple of weeks, I have came across a few indicators, have mustered up a few ideas of my own, and it's all going to be circling around the box trade method. I feel as if Steve neglected to focus on the box trade method because he wanted us to focus on the plethora of indicators that he gives us. And what I mean by that, he provides us with EMAs, pivot points, a TDI, session boxes, and we're expected to learn that at our own pace. But from experience, it's kind of hard because with these strike zones, we have a mindset that we need to make money fast, we need to make money quickly. And I believe that when we do get on the trade process or on the trade floor, when it does come time to execute, it's kind of a hard deal because we have all these rules and parameters in our head floating around before we can even click the trade button. Okay. Well, I'm here to put remedy to that. I'm here to put your mind at ease. Okay. So before we begin, take the time to throw out the past systems that you learned and open your mind to something new. If you never discovered the strategy before, just open your mind real quick. All right. So please take the time to throw out what you learned about the strategy. Throw out what you believe about the market. Throw out those past indicators that you downloaded from other systems. Save it for another time. You don't need those right about now. We're in this room because we're having a hard time grasping this knowledge. We're having a hard time locking in profits. We're having a hard time of understanding the methodology. Well, as bare as this room is, that's how bare the strategy is, and it can be. And I made it more simple. I made it more accessible. Okay. If you look towards your left and out that window, there's an army of people rooting for your downfall, sprinkled with a couple of cousins or family members that's going to be rooting for you. But nevertheless, once you put yourself in position, you will see your enemy. You will see those opposing you. And you separated yourself for a very good reason. Okay? So again, we're starting off with a clean slate. And we're going to be able to gain something that's very, very easy. Something that's very, very achievable, because we're going to be able to have a routine that's strict but very lenient on our daily lives. Okay? So I need you to set up a barrier in your brain. Whatever you go through when you're trading, whatever floats in your mind, block it out. Whenever you go to bed, block out those burdens that may pop in your head. 7 times out of 10, they're not your own thoughts. They're sent by our enemy. This video is not about that. But I need you to exclude the negativity. Get rid of whatever is worrying you, because with this method, it's going to be a key to what you're lacking. It's going to fill in the void of what you're missing. Okay? So those emotions, those physical problems, they have no place right now. So set that barrier up. Preferably a white barrier would be nice, but you'll get the gist, right? Thank you. So welcome to my humble abode. You're probably saying to yourself, I see all these files We have all these indicators, all these lessons. Where should I start? I don't understand. Well, just slow down and take the time to evaluate what you have acquired, because each indicator may not suit you. Maybe even the ATS videos may not grasp upon you, but I'm pretty sure that the more that you watch those videos by these other so-called gurus, apart from Steve's videos, it's all the same thing, just in a different color, just in a different template. Okay. I believe that you will be able to find a system based on the market maker's template, or strategy, I should say, can suit your needs. I don't want you to feel that, or I don't want you to, be discombobulated, and, you can't start at two, understand, and you know that there's some type of step one out there. No, you can come to the strategy and mumble jumble it all up. Just as long as you understand it, you can apply some type of routine. But obviously you can't. That's why you're watching this video or still sticking into this video, right? Okay. So understand that the files that I have is all to further punch in your brain that this market maker strategy can be simple or it can be hard, but you have to decide on what you're going to do. And I'm just here to help you. Okay. What I have is from me digging for gold. Yes, I set myself out on a mission to find that one true indicator that can make sense of the M and W. I didn't want to focus on the higher time frames. I didn't want to become a swing trader. You know, I knew that there was money to be made with those type of strategies of focusing on the higher time frame, but I didn't want to put in the work in. I wanted to find that one pot of gold that will set me free. And I have yet to find that one indicator that can set me free. And there's not an indicator that can do that. An indicator is going to assist you. It's going to give you some type of pathway onto, or a guide you to that trade. So don't be like me. Don't be like that robot that's just digging out in the middle of nowhere, just hoping to find something. It all relies on you. It all relies on back testing and getting live. After back testing, getting live market practice training. That's how you'll be able to recognize these setups and finding setups that resonates to you. Okay. So now you have to ask yourself, will I be a swing trader, or will I be an intraday trader? Or will I be one of those traders that trades every day, 9 hours or 10 hours a day? I myself, I won't say I trade every day, but once I find that one trade, when I do put in 7 hours a day, 7 or 8 hours a day, I'll stop my whole trading for the week. And that can happen on a Monday. The latest I do get my trades is Wednesdays or Thursdays. And then I have Friday, Saturday, Sunday to relax and recuperate my mind. So with the box trade method, we're going to be having the opportunity to become all of those type of traders or trade styles all in one. The goal is to find one trade Monday through Friday. Whatever comes first, that's that. So if we find a trade on Monday, we're not trading for the rest of the week. I don't care if it's 40 pips or 30 pips. You made over 25 pips. Less is more. The more that you refrain yourself of being exposed to the market, the more higher chance of being a successful trader that you have. That's where the 95% success rate of the strategy comes from, because we're taking second legs, we're taking less trades throughout the month, you're trading every day, right? And you're exposing yourself, you're taking losses, you're slowly pacing yourself to achieve your goal. But that's how they trick you. That's how they get you. Oh, you have a 30-day limit. You're going to be trading every day to get that limit. And that's not what professional traders do. Okay? We're going to be professional about this. We're going to be expertise. We are market technicians. And I'm going to show you why I'm a market technician and why you're a market technician. Okay, so when people ask you, oh, what do you do? Don't say, oh, I'm a trader. I'm a day trader. No, you are a market technician because you're bringing multiple tools to your analysis to enter a trade. You are a market technician. You're supposed to go to school for that, college for that. No way. So step one, you need to decide on what session you're going to be trading. Are you going to be an Asia trader? That's from 5 p.m. to 1 a.m., I believe. You could check the notes in the drive folder just to correct me, okay? But I mainly trade the London Open, which is from 3 a.m. to 7 a.m. I know the gap time is from 3 a.m. to 3:30 a.m., which is like a half hour basically for that session open. And then New York is from 9 a.m. to 5 p.m. and the day resets. So you have 3 sessions to trade. If you have a full-time job, maybe trading the Asia Open is good enough for you. You don't want to wake up at 3 a.m. because you need your beauty sleep, right? And like I said, you don't want to put too much emphasis on this, but we're working with those type of sessions, and each session has a market maker present in there. They're going to set a trap in the beginning of the session or at the end of the session. They're going to set a trap at the beginning of the day and most likely at the end of the day, which will be called the New York reversal trade. And that's only valid when we have 3 levels of drop or 3 levels of rise on an intraday scale. But we're going to get on that in a couple of minutes. Okay? So, again, decide on what works for you. So, with step 2, now we have to initiate our routine. This is what we're going to be doing on a monthly, weekly, and daily basis. We have about 5 trades or 5 setups that will be given to us, all collaborated to equal about 17 trades. Not 17 days, but 17 trades when we bracket our routine basis with the box trade method. So on a higher time frames, we're looking at a monthly time frame that's going to give us 1 swing trade. That's trade 1. After that first week of the beginning of the month, or I should say, after the 2 days of the first month, which is Monday, Tuesday, we're going to be heading on to the weekly trade, which is the weekly trap. That's going to happen on Monday and Tuesday, 4 times out the week to represent 4 weeks of the month. Okay? No coincidence in that. You see, it's trade 2 days, Monday and Tuesday. We're going to see the weekly trap, the weekly M or W happening on a first leg of the Monday, and then the second leg should happen on a Tuesday. If not, it can happen on one day. Okay? And then after that Monday and Tuesday, we're going to head down onto the 15-minute charts for the rest of the week, which is Wednesday, Thursday, Friday. That's trade 3, trade 4, trade 5. I'm not saying that you're going to get 3 trades for the rest of the week or 5 trades every day. No, this is just us searching for our trap pattern, searching for a trade that resonates to us. Okay? So on the 15-minute charts on Wednesday, Thursday, Friday, we're looking for type 1, type 2s, type 3s. And that's that. So at the end of the month, we have about 17 trade opportunities to look at. We're just shooting for one a week. Me personally, I'm getting 50% return on my capital. Okay, 4 trades a week. That's 200% each month. Now, I may not get 4 trades a month. I maybe just get 2 to 3. Last month, only was able to get 3 trades a month. I mean, yeah, for that month. And I was happy for that. That was 150% return on my capital. And then I lost a couple of, not a couple, but I lost 2 trades last week. Okay. For the beginning of this month. That's that. There's a 15 pit stop loss. I'm going to be able to make that back because why? I'm staying out of the market. My mindset is already saying, Kai, we're going to be making less money, but the returns are going to be astronomical because it's 56%. We're trading a 95% winning success strategy, and we're adding another 10 or 20% on top of that because we're staying out of the market. We're taking second leg formations, okay, and we're taking trades that's support and resistance based trap patterns. Okay, we're not taking just any willy nilly setups on a Monday through Friday um, parameters. No. Okay. So when we able to set a clear roadmap, when we're able to set a clear discipline, I won't say discipline, a strategic parameters around this, we're setting ourselves up for success, not failure. That mindset of going to the markets every day, trading every day, is wearing us down. And when we worn down mentally, physically, we're going to be rushing for that profit. We're going to be rushing for that high that we get when we do win a trade. We're rushing for that smile. No, that's not what we're going to be doing. We're going to be doing this real smart, okay? And I swear, if you're still saying to yourself, I still don't understand, listen, you little ingrate. I'm gonna have to hold your hand, I guess. I'm gonna have to take you to these charts and show you what I'm talking about. Okay? I'm not mad at you, but this is what I mean, where probably having a few things around your just clouding your judgment. You're just overthinking. Stop overthinking. It's very simple, okay? Duh, duh, duh. No, I'm just playing. But look, we're gonna make this very simple. I'm gonna show you, take it to these charts, and do that. Before I take it to these charts, let's read a little bit of material, and then we'll go on the charts. Okay. So one of the tools that we're gonna be able to use is the PSR, weekly cyclical support and resistance, which is actually the accumulation zone for the current week. So so with this, Monday and Tuesdays, our sessions are all combined in what one. Mondays and Tuesdays are going to be. We're not focusing trade one, trade two on Asia, London, New York, Mondays and Tuesdays. When we trade the box trade method, this accumulation zone will act as a trap zone for the market makers, the weekly and weaker traders. 15-minute chart. The PSR is identified on the 1 hour time frame, which can be used on the 15-minute time frame. And then when it comes to the weekly after the first session, we're going to be able to hopefully add on to the position. Meaning the first 8 candles of the week and then act towards the end of the week. Support, we're getting quick money. We're getting money that once the market makers have make for that zone, for that session, they will make a false move week beginning. So that's that, which act as an initial induction of the week. That's that. Or shakeout. Once the shakeout has been set or stop hunt, it will act as the peak formation for the week. This is when we look for signals that show us the trend will reverse, and this is when you trade in line with the market makers against the peak formation. So where Steve neglected the inputs on this. This is trade 2 of the box trade method, of the weekly structure. He neglected to put that on there. Maybe he did that on purpose, but I like to think that he didn't want us to get so mumbo jumbled up, because we have to count levels, we have to worry about type 1s, type 2, type 3s, we have to worry about the higher time frame box trade, which is the weekly, and it's not that hard. So just to reiterate, on Mondays and Tuesdays, we're looking for that trap pattern. So we're looking at the weekly PSR. We're going to famously see that accumulation and that breakout. That breakout from the weekly PSR is going to be a false move towards the last week's high or low. That's where the box trade method is going to be forming. That's why he says just set up alerts there, because we're going to be waiting for that trap pattern, the second legs, to develop on Monday. I mean, the first leg on Monday, and then the second leg can happen on a Tuesday. Okay, so let me show you on these charts. All right, so we're on the US 30 and we're on Monday, right? This is Monday, this is Tuesday. You see this high right here? Let me get my little trusty arrow and turn that on just to show you. That right there is the high of last week. We're waiting for, before I say that, and this is the weekly PSR. This black line right there, that black line, and this is the middle of the weekly PSR. Okay, so we're just waiting for price to do some type of accumulation and trap. For US 30, it was already issued on that Friday. Why? Because market makers don't want the retail traders to pick up on this strategy, so they're going to offset the template. So that's peak formation, ID 50 move, level 1. We could say this is level 2, peak formation, level 1, straightaway. That's that. So let's look for a textbook Monday, Tuesday trap. So we head over to the German 30. Sorry, just bear with me. What I'm gonna have to do is so we're on the German 30. We see that it mimic US 30, so nope. So we found something on the Francis 40. It's kind of sloppy because we didn't receive any accumulation. Maybe we could say Monday acted as a little bit of accumulation, but you see that Tuesday late in New York session, we have that peak formation at last week's low. At last week's high. This area. You see that? That's a perfect M, and we would take that as a swing position for the rest of the week to sell for 3 days. Okay, and that's our trade. We're done for the week. So again, if you don't catch the Monday, Tuesday trades, don't worry about the support and resistance weekly trap after that. Just drop down to we're on the 15-minute charts. Just worry about the intraday traps now, the type 1s, type 2s, type 3s for the rest of the week, and you're good. Okay, you're not going to be swing trading, you're just going to be trading for the day, and that's that. So let's see if we can find something else. And we see that they immediately stop hunt on Monday and issued that first leg to cut or to manipulate the breakout traders of last week's high. And this panned out to be a head and shoulder pattern. So you had London session and New York session to take the sells, and you would have held that for 2 to 3 days. Okay, and you see the weekly PSR, the consolidation, and then the market makers went on the preceding trend down. So I just want to show this example in SPX where the market maker trap pattern template was offsetted to happen late Friday, and then Monday, Tuesday was just straight trend. But you can see that last week's high had a perfect M formation. So there was no trade opportunities on this pair for us, and there was no trade opportunities on Wednesday. Maybe on Wednesday we can see that big old stop hunt, but like I said, we're looking for clean setups. Okay, so for AUD, we can see that price violated our rules. It proceeded to do a type 1 weekly box trap. We still have our W on Monday and Tuesday forming. So this was a nice buy, but nevertheless, we want to see this price action happen at this low. You can see that we have this blue line. We want to see that price action here. And if you take note, we can actually see that my theory of actually projecting the support and resistance PSR, this is two things: support and resistance PSR. This blue line right here, setting up for buys. The market is setting up to buy. So when price does come down here, I'm waiting for price to reverse anyway. So this PSR is acting as the current week's PSR. Okay, but when price does come down here at the previous week's low, we're going to have two lines down here that act as reversal parameters. Okay, so that's nice that I included that, right? And GBP CHF put in a double top early on Monday. We would have won on that. That's nice. We would have a lovely setup if this price action would have happened up here, but that's fine. We just know, again, the template was kind of offsetted, but nevertheless, peak formation M, ID 50 move, level 1 consolidation, drop. I want to show you something else. Now we have our textbook accumulation. Monday acted as a trend day to go in, but Tuesday put in the second leg for the trap. Look at that. Pinpoint accuracy. Can't get anything better than that. And that was a clear-cut type 1 setup reversal. So New York reversal came true. We would have held this position for 2 to 3 days, and we rewarded, I don't know how many pips, but we rewarded very well. And once you get better at these setups, you will be able to stack on positions all through here like crazy. Okay, because you have enough confidence. But like I said, we're just sticking for one trade anyway. But I'm just saying that once you do find a setup that's textbook to you, then you can go all balls fury. Just play it safe. Just play it smart. But nevertheless, we're shooting for one trade a week. We don't want greed to get a hold of our hearts. Okay. So even though price broke out of last week's high, on Tuesday gave us our M formation, we would have got stopped out because market makers did not present a valid trap formation at last week's high. They broke out, which means for us that this was a significant, all this area was significant to get stop hunted again. We want to see them respect last week's high. That will give us enough confidence that they're not going to come back to that market level. But nevertheless, we would have got our 50 pips. Even though we have other trade opportunities throughout all that Tuesday and Monday and Tuesday for that week, we just know that when we stick to textbook setups and follow our trade plan, our trade rules, we won't be subjected to this type of manipulation. Okay? Hold up.
embarrassing. I think late, it ain't embarrassing. Oh, wiggy, wiggy, oh, wiggy, wiggy, oh. Hold up, wiggy, wiggy, oh, wiggy, wiggy, oh. Wiggy, oh,